Let's break down the differences between investing and trading and help you figure out which might suit you best. Investing is easy to get started with, almost anyone can do it, and it doesn't require much time. The trade-off is that returns tend to be moderate. Historically, the S&P 500 has returned about 7 to 12% per year. For example, investing $1,000 would earn you $70 to $120 annually. Investing is all about long-term growth, thanks to compound interest, where your earnings generate their own earnings over many years. Even modest initial investments can grow into significant sums. For instance, consistently earning 10% on your money could turn $1,000 into around $145 and $370 over 50 years, compared to only $6,000 without compounding. Index funds make investing even more accessible by allowing you to invest in a broad swath of companies at once, mirroring major stock indices like the S&P 500 or Nasdaq. Hedge funds operate similarly but manage money for others. Still, investing carries risks. Returns fluctuate year to year, and the timing of withdrawals matters. The market downturn right before retirement could mean cashing out at a loss, as happened to some retirees during the 2008 financial crisis. Trading, on the other hand, comes with higher barriers to entry. You need extensive knowledge, experience, and practice, often demonstrated through consistent profitability in demo accounts before committing real money. Many traders struggle for years without success, sometimes due to poor discipline, strategy misuse, or emotional decision making. If you pursue trading full-time, the goal should be to outperform average market returns, about 10% annually. Otherwise, the time commitment may not justify the effort, especially compared to passive investing. Consider whether you're willing to dedicate the necessary time and whether you can achieve better than market returns consistently over a decade or more. If not, investing might be a better fit, offering flexibility to work a regular job while building wealth for retirement or other goals. Ultimately, ask yourself if the time spent trading is worthwhile compared to the ease and historical reliability of investing. Time is precious and non-renewable. Choose a path that aligns with your goals and brings you satisfaction. If you found this video helpful, don't forget to hit the like button, subscribe to the channel for more content, and leave a comment below sharing your thoughts or questions. Your support really helps us grow.